Good day, everyone, and welcome to today's market fundamental and technical breakdown. My name is Anthony Phillips Njoku, and I'm the founder of 10x Digital Lane, where everyone who has a knowledge gap in digital trading can be able to get the right knowledge and the right guidance, also the right tools that will help them to be able to trade the financial markets profitably. So if this is your first time, you're welcome. Don't forget to smash the like button, comment below what you like about this video, and share it with your friends and family. Well, if this is not your first time, thank you so much for coming back. I appreciate your time and your efforts to keep learning to become 1% better in trading every day. So how this market fundamental and technical breakdown goes is this. First of all, we start with the technical breakdown. We start with the technical breakdown. We start with the technical breakdown. We start with the technical breakdown whereby we discuss about the charts, okay? How the chart works, okay? And aside from the charts, we then dive into the fundamental breakdown. The fundamental breakdown has to do with the blood of the body of the chart, okay? It has to do with fundamental analysis. You need to be able to understand the two works hand in hand, okay? The fundamental and the technical. Some institutional traders will say that they prefer to trade only fundamentals. Some traders will say that they prefer to trade only technicals. So this time around, we want to understand the two, okay? To know how they can work hand in hand because they do work hand in hand. So with that said, I will share my screen right now. Okay, so right now you're in my screen. This is Euro USD. Before I move forward in analyzing this week's technical breakdown, I'll first of all show you guys our analysis for the last week and how it played out. Okay, so for last week, first of all, we said Euro USD. This was where the last week weekly high and weekly low was. So we expected the market to supply zone, we expected it to drop. And secondly, we said from this area where the market opened on Monday, what did the market do instead? The market on Monday dropped. After it dropped, literally the area we expect for last week is still solid. Okay, it's still solid. So with that said, that's for the Euro USD prediction and how it went so far. So the next is AED USD. AUD/USD hits to the point. So we said last week on AUD/USD, we expect the market to come towards this supply zone, which that's what the market did on Tuesday. It came towards the supply zone, activated trades, and then from there took the previous week low. And after it took the previous week low on Thursday, it gave us a second entry and also went lower on Friday as well. So that's for AUD/USD. So this was accurate and on point. Then on gold, we said that gold is going to go down. So we had this uptrend channel, okay, and we also had this supply zone here. This supply zone. We told you that gold is going to head towards the supply zone. After it heads towards the supply zone, we're expecting to drop, and that's exactly what gold did. It went to the supply zone, tapped this supply zone, and then dropped. Last on the list is BTC USDT. BTC USDT. So BTC USDT last week was Monday, and this was our current position on Monday. We told you guys that BTC USDT is $100,000. So BTC last week. So we're going to still analyze Bitcoin and the rest. Well, these are the four pairs we analyze. So if you want to know how we're able to analyze, forecast this market, dive down to our website, www.10xdigitallane.com. The link is going to be on the description, okay? Yeah, that's where you now gain access to our educations. You get access to our uh mentorship, you get access to our academy, or you can just go to Google and search 10x Digital Lane, and every details about us will pop up there. Both our social media, our website, our stores, where you can go and get discounts and so on and so forth. So that's literally where you get the information. 10x Digital Lane, no.com, just 10x Digital Lane. Let's go to search it. Yeah, so these are our websites. So the website pops up, www.10digitaling.com. These are affiliate portals. Okay, these are our LinkedIn profiles. So everything about us literally shows up. Okay, our Facebook page, our GG, okay, and our link tree. This is very, very important. This link tree is very important. In this link tree, that's where you find links to every single product and service you offer. It's one link that has everything. Okay, it's going to be on the description as well. Okay, so it's going to take you to a free trading webinar registration form, which you have done. You're going to receive the video in your email. Then these are our seller store. These are our affiliate store. Okay, you want to be an affiliate, then this to schedule a meeting with me. This to if you want to become a student and learn about Forex or crypto. Then this is our newsletter, our YouTube channel, every single link you want. Our recommended broker, Hot Forex is here, Hit XNext, crypto broker, Binance, KuCoin, stock broker, all here. If you're close to know how to buy real estate with just $1, it's over here. You can get it. Trading View link, Coin Market Cap. If you want to get funded $50,000 on 10 Trade, which is a company that funds traders, you can use this link to get funded. If you have a business in the United States and you want to get funded $1 million after verification, we have clients and we have partners that can help you do that. Then these are our Telegram group. Every single link you need there, every single thing you need, all in one. So let's dive into the analysis for this week. Okay, so let's dive into the analysis for this week. So we are going to start with the monthly time frame first. Monthly time frame. So on the monthly time frame, we see that this candle, which is the September candle, was bullish. October candle is bearish, November candle is bearish, and December shoot for EU. Okay, and we have 4 weeks in the month of December, which trading activities were very active on the first, second, and third week. The last third week Friday, so we have just 2 weeks to trade and bearish. So literally, the second and the third week would turn out to be the opposite. So what we look out for in the monthly time frame is candlestick patterns. Candlestick patterns. We see that this market is going to the downside. Candlestick patterns. Then on the weekly time frame, we go to the weekly time frame and we look for chart pattern. Before we look for chart pattern, we like to spot out the previous week high and previous week low, just like we saw on the AED USD analysis of last week. AED took out the previous week low and it went lower. So that's literally why we're marking out this previous week high and previous week low. So something else we need to check out is the chart patterns. Okay? Is the chart patterns. So for the chart pattern, we see that double top, triple bottom, triple top, descending wedge, ascending wedge, descending triangle, ascending triangle. So we need to figure out which type of chart pattern are we currently facing here on the weekly time frame. And on the weekly time frame, based on what I can see right now, is forming like an ascending triangle. Okay, but ascending triangle usually forms at the top of a trend, at the top of a trend, which is a breakout, which the market, if the market goes to the upside, it's going to break out and continue going up. So literally what I see right now on Euro USD is because the market has gotten close to this reversal point. The market has reversed CL4. This is the first touch, this is the second touch, and this could probably be the third touch, which is going to be a triple bottom if that happens, and then we can expect a push to the upside on weekly time frame. Something else is because the market formed these highs here. Okay, this high is here now is forming like an ascending triangle. And literally the principles between the ascending triangle is that if the market forms so here, does this, okay, there's literally an opportunity for a breakout. So this is what an ascending triangle literally looks like. But this time around, this ascending triangle is formed on the end of a downtrend. So the principle is meant to form at the up of a trend, as in at the top of a trend, to continue the bullish structure. So two things is in play: the ascending triangle and the double bottom. So we have figured out the chart pattern that is involved. Let's go down to the daily time frame, which is the prevailing trend. The prevailing trend right now on the daily time frame is still a downtrend, and since it's still a downtrend, there is still high chances that we see euro drop to the downside towards this daily validation point. There is still high chances about that, and also there is chances of what euro moving to the upside this way to continue pushing up. Okay, so with that said, let's go down to the, and I already marked out the daily supply zone and daily demand zone. Okay, so let's go down to the 4 hours time frame. So for the 4 hours time frame on Euro USD, what do we see? What do we see? I see on the 4 hours time frame that this high was taken. This high was taken from last week, and we have a we can call this a 4 hours demand. We can call this a 4 hours demand over here. We can call it 4 hours demand, and we can call this a 4 hours supply. That market came to respect this. Okay, so sales are literally still in play. Okay, so sales are literally still in play. And based on what I can see, there is a change of character here. This is a major change of character, which started on Friday. Like I told you guys, we see a trading opportunity, we're going to call it live. So if I go down to the smaller time frame, okay, so this is literally where the cause is supply cause. Although the market has fulfilled that efficiency, okay. So we see market come back towards this zone. Okay, we can give you 20 pips and aim for 40 pips. One, that is, if you're risking 1%, you're making 2% of your capital. Or we can just make it 50 pips, so that would be 2.5%. So this is literally what I see on Euro USD right now. So it's this cause because there's been multiple rejections and it's fulfilled this efficiency. 1, 2, and if it comes back here, likely we'll see a drop. So that's it for Euro USD. Then the next is AD USD. AD USD. So for AD USD, we start with the monthly time frame first. Okay, so AED, the monthly time frame candle was a sharp drop. The monthly time frame candle was a sharp drop, and it is currently close to this monthly demand here. Currently close to this monthly demand here, which if liquidity comes and is taken below this low here, I can see a massive rejection play out on ADSD on the monthly time frame. After this liquidity is taken below this low, I mark this point here. And let me go down to the, okay. There is this effect, so it's not cause. There is this touch, second touch, third touch, okay? And there could be a rejection without getting to this liquidity point here, this low, this previous low, because if you can see, the market has been creating higher highs that has not gone below this low ever since. This high is higher than this low. Sorry, this low is higher than this low. This low is higher than this low. So there's chances that this low will be higher than this low. So there is chances that we'll see a push to the upside on ADUSD. And based on chart patterns, let's go to the weekly time frame. Based on chart patterns on the weekly time frame, what do we see? Okay, we see a descending wedge. It's a descending wedge. So literally, this is the descending wedge. And based on descending wedge, since it is at the bottom of a downtrend, this is possible for a descending wedge. That's the principle. So literally, but the wedge is initiated when it is broken, when the low is broken. So that low is not broken yet. And literally, we could still see what a pullback from this to get what to this top of this wedge again. Okay, so that is still possible. Okay, so with that said, let's mark out the previous week high and previous week low on the weekly time frame. Let's mark out the previous week high and previous week low. Okay, so this is previous week high and this is the previous week low. Okay, good. Then let's go to the daily time frame. On the daily time frame, we are meant to look for the demand level and the supply level. So let's see. Let's go to the past first. Let's get the demand level first on the daily time frame. Okay, so I spotted the demand level. This is the demand level here. Oh no, let me leave that line where it was and draw a new line. This candle, this last red candle. Market always goes close to that candle and reverses. This candle, this last red candle here, came into it here and pulled back. Came into it here and pulled back. So that's the daily demand level. So what about the daily supply? That's going to be the last blue candle. Okay. So let's get, I think this fulfill efficiency. This fulfill efficiency. Okay, so we're looking for the daily supply right now. I think it fulfilled efficiency. So and if you see we have a confluence of that liquidity grab and daily validation point. So there's chances that market could just literally go grab this liquidity and then start pushing up. And this up push could be far, it could go massively, even into January. So there is a confluence here. So let's see how that plays. Then let's go down to the 4 hours time frame. So on the 4 hours time frame, we look for the 4 hours supply zone as well. I think this is the 4 hours supply zone because it does not fulfill the efficiency. Not based on my think, I see. This is supply zone, 4 hours supply zone. We'll as well mark out the 4 hours demand zone. Okay. We need to go to the past to mark out that 4 hours demand zone. Okay. This was where we got our daily demand over here. And that's fulfilled efficiency. So this is going to be our 4 hours demand zone. So let's extend it. Okay, so the market already tapped into the 4 hours demand zone. And this is the previous week low. So we still have chances that the market could literally start pushing up from here. Literally. Because we're in a demand zone. Okay, so that's what I see. What else do I see? I see more like a change of character at this point, at this low. Yeah. So if I'm to go to the lower time frame, this would be the entry. If it has not done that, that's activated the entry already. So the entry was activated by 5:30 a.m. today. So we're not still late. Oh man, market is just pushing up. But let's get a better price. Probably going to place a buy limit order. If the candle comes down a bit, we'll take our entry from there. Then our stop loss at 20 pips below this. And we aim for 60 pips up here. So that's literally what I see on AED. But this move has already started kicking off. Okay. So we're going to give you some time. If it comes down a bit, we buy. But if you are courageous enough, we would have bought. Immediately we saw that push, that massive push, that bought, but the stop loss is going to remind it's going to be like 30 against 30. You're risking one to make one. So such trades, I don't really like to get into such trades. I like the market to give me like 1:2, but I'm risking 30 and making 60. Do you understand? So that's usually what I think. So if there's a little pushback, probably we're going to get in for that 30 to 60 move. Okay. But remember, the market always gives opportunity. So if it doesn't give you the opportunity today, you can come back tomorrow because the market is always there. So that's it. The most important thing is to secure the mental capital and your own capital as well. So let's go to the next pair, which is gold, XAUSD. So for gold, let's start from the monthly time frame. What do we see? Okay, so for gold on the monthly time frame, we see that gold created this high in October, and then November was a bearish candle with a week, but it did not engulf October. And then December has started bearish as well. So there's two chances that gold would come and use December to fill this week, this low, to fill the week, to fill the time frame. We mark out the high and the low of the previous week. This is the high. This is the low of the previous week. Okay, so that's it. We also meant to look for chart patterns on the weekly time frame, but there is no clear chart pattern here I'm currently citing right now, except for this ascending wedge that is this way, and it requires patience. Okay, so the ascending wedge plays out, you need to break the wedge to the top, then continue pushing up. So that's the principle behind trading an ascending wedge. Then we go to the daily time frame. On the daily time frame, I see a much clearer chart pattern on the daily time frame, and it is called the head and shoulder pattern on the daily time frame. This is how the head and shoulder pattern plays. Over here, this is the left shoulder, this is the head, this is the right shoulder, and there's meant to be a break of this neckline to activate this head and shoulder proper. So it also demands patience. The break of this neckline this way. So if we see a massive push above this, we are expecting what? Continuation push, which is a break of the previous week high and also a break of this ascending wedge to get a much clearer buy. But if we see what? A break of the previous week low, this trend line, and also this neckline, so we cannot expect gold to even drop further. But due to fundamentals going on right now with US and China and the trade war with the traffic tariff, 100% tariff imposed on China, which is making China to export literally 80% of our products to Mexico, then from Mexico getting it into US. It is possible that gold will keep going up due to fundamentals that has happened in the past. Okay, due to fundamentals that happened in the past, that whenever that such events happens, gold will keep increasing. So it's literally a trade war. So this is buys and this is the prevalent trend. Okay, for the daily time frame, we're still maintaining that buy structure. So on the 4 hours time frame, literally, oh man, I need to mark out the daily demand and supply. Okay. So this is the daily demand, this is the last red candle, and the daily supply. The daily supply is meant to be this candle over here. No, meant to be this candle. Okay. Okay, so that's usually daily supply. So we go to the 4 hours time frame. Here on the 4 hours time frame, what do we see? Let me delete this line so we get a much clearer picture. So on the 4 hours time frame, if I'm to say this is now the new 4 hours demand, sorry, supply. This is now the new 4 hours supply zone over here. And market is literally within that zone. A break above that zone would use the reoptimization zone to continue buying to the upside. So if we see a break above this zone, we use this reoptimization to continue buying gold. Okay. But if we see the respect of this zone, we could now enter from here to take the sales lower to this supply, to this demand zone on 4 hours. This is 4 hours demand, and that was our original target. So we need to see a rejection first from that zone. Once we see a rejection from that zone, then I will say, well, it is good to sell gold. But due to the trade war, things can literally change out, and then the buyers will continue from this area to move to the upside for XAUSD. So finally is BTC. BTC. BTC is already clear to me. And I'll start with the weekly time frame. I'll not go to the monthly time frame literally for Bitcoin. I will start with the weekly time frame. Why I'm starting here is to mark out the previous week high and the previous week low. So this is the previous week high low. I'm going to mark out this previous week low over here. Probably going to delete this line. Okay, one thing I need to let you know is that gradually profit taking has started going on Bitcoin. Okay, profit taking. So if you bought Bitcoin probably at 40,000 above to like 80,000, should have made some substantial profits. I would like you to like take 75, but this is not financial advice, it's just for educational purposes, and spend that money on yourself. Don't just take it and say let you try and flip it again because I think the hot season. Spend some money on yourself, then you can invest the remaining. So literally, this is what I see for Bitcoin on the daily time frame. We're still having a prevailing uptrend. They're still having a prevailing uptrend. So where is the daily demand zone? So for the daily demand zone, this is the daily demand zone, which is this last red candle over here. That is the daily demand zone. Good. So exactly. So we go to the 4 hours and we spot out the 4 hours demand as well. So we're currently inside this 4 hours demand. And like I told you guys, the Bitcoin is going to hit $200,000. So as soon as Bitcoin hit $200,000 on Thursday, there was a massive FOMO in the evening taking down this low and liquidated a lot of people. So this low is a protected low now. It is a protected low. So we're not expecting market to come back towards that low again for some time. What we're expecting Bitcoin to do right now is, thank you for this counter trend line. We're still expecting buyers for Bitcoin. So you can either buy Bitcoin at a discount price, I mean, which is it is inside the 4 hours demand. So let's mark out good. Let's mark out, I see a change of character here. So let's mark out this, very important, and then go to the smaller time frame. So if we see Bitcoin head towards this low, yeah, it's close to it. It's very close to it. We'll be taking the buys, okay, from this low once it taps towards there. So I'll keep my eye on it and we'll be taking the buys from here for Bitcoin. Our major target is going to be the $108,000 per Bitcoin mark because literally psychology. They won't just drop the market like that. They will want you to think that yes, they are still interested to push the market higher and higher, so you buy. Every frenzy on social media right now is talking about yes, Bitcoin is going to go to $1 million, $1 million, $1 million. Mainly, the owner of my MicroStrategy, who has been the pioneer of such. So literally, if the market heads towards this low, this is when we're buying, okay? But once it heads towards this 108, we'll sell every single position because they want you to be in the trade thinking that it's going to go higher before they actually dump it. Do you understand? So they'll keep doing some PR, media information that it's going to $1 million, it's going to a million. That's what has been trending right now. If you go through a lot of social media posts on Instagram related to coin market cap, coin telegraph, they're just saying $1 million, $1 million, so that you would presume, but it's not coming now. $1 million can come here probably in the next 4 years or the next year, but it's not coming now. The season is gradually shifting to hot seasons. Ethereum, SU, XRP, Solana, BNB, their season is gradually being activated right now to hit all-time highs. So if the market comes towards here, we're buying. And if the market doesn't get to that place and decides to break here, once you see a range, we're buying from here and we're heading here. So that's literally my game plan. So something else that also make me not to buy from here is if I see a candle, if I see this type of volume on the MACD, I'll literally buy. Okay. So because that is also a signal for pushing to the upside. So this is my analysis for Bitcoin right now, and I hope you got value. For the news for this week, we have Monday, we have China CPI today, which is not really relevant. Tuesday, we have the Reserve Bank of Australia policy decision making, which is tomorrow, CPI. Then US NFIB Small Business Optimism Index, which is not really important. Japan Takan Index, Japan PPI, and then US CPI, okay, which is on Wednesday, which is very important. Then the Bank of Canada policy decision, also important. So Tuesday, we have Australia, massive news on Australia, which is the decision making. Then Australia labor market reports. Then the SNB policy decision making, a lot of policy decision making, ECB policy decision, US PPI, US jobless claims, and then New Zealand manufacturing PMI, and on Friday, Bank of Japan Taka Index, UK GDP. So Tuesday, Wednesday, Thursday is massive impact news for us, whereby we're trading the Australian policy decision making. It has to do with interest rates, and we love that news. This is coming in by 4:30. Okay, so if interest rate is hiked, it makes the currency to be strong. If interest rate is lowered or cut, it makes the currency to be weak. So this could be a news that would make AUD to be strong. Okay, but if interest rate remains unchanged, that's now a 50-50 edge sword. Okay, it can react in either buys or sells. So we would presume that this is going to literally give Australian dollar the strength it needs, which is literally the buy setup we are aiming for. Then on Wednesday, we have the CPI as well for the dollar. That's by 2:30 p.m. Okay. So if there is hike in inflation, it makes dollar strong. If there is lower inflation, it makes dollar weak. That's literally it. And that's the most important. Then on Thursday, we have the ECB interest rate decision by 2:15. So these are the most important news for us to trade. Every other news is quite important, but these are the ones that will have the major volatility. Thank you so much. To stay updated, join our Telegram, join our social media. It's going to be on the comment section and the description, so you don't miss out on any of our signals. To reach out to us to learn, just click the like button, subscribe, and share this content with your friends and family. I really, really appreciate your time and your effort, and I wish you a profitable trading week. Peace.